Thanks for your interest in Zach's Suprise Trader Service. Editor of the service, Eric Dutram, is here with me to kind of give us an overview about what this service is all about, kind of looking behind the curtain, under the hood, whatever way you'd like to describe it. But let's start out with the basic strategy of Suprise Trader.
Well, the basics behind Suprise Trader is to find stocks that are going to be beating earnings. The idea here is that stocks that beat earnings have a much better chance of outperforming the regular market than any other type of stock.
Okay.
So we want to find these stocks, but obviously we want to find them before they surprise on their earnings reports. Mm-hmm. That's the key to this whole Suprise Trader process.
All right.
And one of the key areas we need to look at is this idea of ESP, and it's the proprietary Zacks model for finding the winners ahead of time.
But not extrasensory perception.
No, although hopefully that will come into play as well.
All right, so more about that. What is that all about?
Well, the Zacks ESP is our system, and we use it to find these earnings beats and hopefully, to get some big winners for the Suprise Trader service. The key here is that it looks at the most accurate consensus and then also the most accurate estimate for any company that's going to be reporting earnings, and it compares this to the Zacks consensus estimate. So the idea here is to look at some of the most recent estimates and look at the wider consensus and try and find any sort of divergence that's going to be a big move and suggest that this company is going to beat earnings. And obviously we're going to apply the Zacks rank to this process as well, because that's obviously the key for what we do here at Zacks.
So historically, have stocks with strong ESPs performed well?
Yeah, we actually did a 10-year back test very recently for this, and we've seen very strong results. As we can see in this chart right here, stocks with a 1, 2, or 3 with a Zacks rank, as well as a positive earnings ESP, have absolutely crushed the S&P 500 from a period of 2002 to 2012. And then if we look at companies and if they do beat or miss earnings, we can see 70% of the time there's a positive surprise. Just about 9% they meet earnings, and then the rest are misses. So we have almost 80% shot of at least meeting estimates when we use Zacks rank 1, 2, or 3 and a positive earnings ESP. So it's a very powerful tool that we're going to use in the Suprise Trader very frequently.
All right, so what about some other general tips that you'd like people who are kind of interested in knowing more about the service? No.
Yeah, there's a couple things you should keep in mind. Got to trust the system. There's a reason we've had such success with the Suprise Trader service and using the earnings ESP. And as I just said on the previous slide, it's got a great track record, and there's going to be a ton of earnings beats in this system, so we got to trust it even if there's one or two that don't work out. Another factor, as I sort of just alluded to, every trade's not going to be a winner. If you take a baseball analogy here, the best teams, they're only going to win 70% of the games. Maybe basketball might be better, 70-80% of the time you're going to win. So you're not going to win all the time, but the idea here is the winners are going to outpace the losers, and that's how we hope to profit with this service. Another factor to consider is that a lot of these trades are going to be very short term. Mostly going to be 2 months or less. So you got to use this compound interest idea to your benefit. And what I mean by that is if we get a 5% winner, but we only held it for a couple weeks, that's obviously better than if we had a 10% winner, but we held it for 2 years or something like that. So we're going to use the gains. They're very short over small time frames, and we're going to parlay them into future picks, and that's the idea behind the Suprise Trader for the most part. And then the other idea is we're going to cut losers very quickly. If the stock fails to perform on earnings day, or if we see any weakness in the report and we're down even 5%, we're going to cut out of the losing pick, and we're going to move on to something else that's going to be better.
I was going to ask you about that. What about those investors out there, those people looking in now saying to themselves, well, what are you going to do if stock beats on earnings but doesn't go higher price-wise?
Yeah, that's an excellent question, Terry, and that's something that is going to happen for sure. And generally this happens for one of 5 reasons. I'm going to talk about them briefly right now. First is sales. Sometimes a company will beat on earnings, but their revenue will be light, and that will be very concerning to investors. Sometimes the stock will fall as a result. Number 2, we've got expectations. Sometimes there's a key area of a report where investors were looking for growth, say in like Apple, if iPhone sales were weak, but the rest of the number was strong. That could be concerning to investors, and they might sell things off. Another factor is quality. Sometimes there's some accounting tricks that might be used, and investors might not like how they feel about the report, and that could cause a small sell-off in the shares. Another factor to look at is guidance. You could have a great report, even have great sales, but if investors believe that the company is going to be weak in the coming quarters, that's going to be a bad signal for investors. And then lastly, one other factor to consider is the overall market. If there's other risks going on, that could definitely sink the stock. So there's not really anything you can do about that, but that is definitely something to keep in mind that could prevent a stock from outperforming, even if there was solid trading otherwise.
All right. Well, thanks for the rundown. There you have a quick overview of Zacks Suprise Trader Service. Hopefully that's helped answer some of the questions that you might have had before you tuned into this video. With Eric Dutram, I'm Terry Ruffalo.